Soaring energy prices are driving up inflation across Europe, slowing down the prospect of growth for both the EU and eurozone, according to the latest European Commission forecasts.
Good morning, everyone. High energy prices, supply bottlenecks, and base effects are acting powerfully to push up consumer prices. Compared to the autumn forecast, inflation projections have been revised up significantly for this year. Indications from future contracts show that energy prices are now set to remain high for longer, and price pressures are broadening to several categories of goods and services.
To keep inflation low and stable, the European Central Bank set an inflation target of 2%. The EU Commission now estimates that annual inflation in the eurozone will rise from 2.6% in 2021 to 3.5% in 2022, eventually coming down to 1.7% in 2023. But experts are cautious over how safe these forecasts are, given that global uncertainties over supply chain disruptions and the pandemic remain high. Concerns about surging inflation are already impacting global markets. In this environment, how high is the risk of a new financial crisis?
I wish I could confidently say I can rule it out. I think the reality is that the eurozone remains in a fragile spot, and I think what we need is we really need two things. I mean, we need the work at the national level to reform and to increase productivity growth. But we also need more European action, and that means, we need to discuss the thorny issue of fiscal union and, more fiscal integration. And I think at the end of the day, the Eurozone cannot hide away this debate forever, especially in a period when inflation will increase and monetary policy cannot step in anymore.
The outlook for inflation, but also for the overall European economy, is also dependent on tensions between Ukraine and Russia. And as Commissioner Gentiloni stresses, peace, stability and economic growth are obviously and strictly connected. Effi Koutsokosta, Euronews, Brussels.